This is a demonstration of problem 538A, journalizing, adjusting entries, preparing the adjusted trial balance, and the multi-step income statement. The problem gives us the unadjusted trial balance of Tiger Electric Company as of March 31st, 2024. So we are given the unadjusted trial balance, and now the problem is asking us in the first requirement to journalize the adjusting entries using the following data. So the first adjusting entry states that interest revenue accrued was $500. So to record that entry, we would debit interest receivable and credit interest revenue for $500. The B part states that salaries selling accrued was $2,400, so we would debit salaries expense selling for $2,400 and credit salaries payable for the same amount. In C, it states that depreciation expense equipment administrative was $1,295. So to record that entry, we would debit depreciation expense equipment administrative for $1,295, and we would credit accumulated depreciation equipment for the same amount. D states that interest expense accrued was $1,800, so we need to debit interest expense and credit interest payable for $1,800. The E part states that a physical count of inventory was completed. The ending merchandise inventory should have a balance of $46,000. The original unadjusted balance in merchandise inventory was $46,250. So we need to record the inventory shrinkage. To do that, we would debit cost of goods sold for $250 and credit merchandise inventory for the same amount. In F, it states that Tiger estimates that approximately $4,500 of merchandise sold will be returned with a cost of $1,800. So we first need to adjust our sales revenue by debiting it for $4,500, and we would credit refunds payable for that amount. And then we need to record our estimated returns inventory of $1,800 by debiting that account and crediting cost of goods sold. So we have now completed the adjusting entries for Tiger Electronics, and the second part of the problem asks us to prepare Tiger Electronics adjusted trial balance as of March 31st, 2024. So I have highlighted accounts on the adjusted trial balance that changed as a result of the adjusting entries. Other accounts that are not highlighted did not change, and we can just take those balances directly from the unadjusted trial balance. So cash stayed the same, so it would be $15,000. Accounts receivable stayed the same, it would be $38,700. We now see that we have an interest receivable account. We didn't have interest receivable on the unadjusted trial balance, so that's going to be a new account, and that balance will be $500. Merchandise inventory decreased as a result of the shrinkage that we reported, so the new balance for merchandise inventory will be $46,000. We also recorded estimated returns inventory. It did not have a balance before, so it would now be $1,800. Our office supplies did not change, so they will stay at $5,700. Our equipment didn't change, so it will remain at $129,500, but our accumulated depreciation did change as a result of recording the additional depreciation expense, so the new balance is $37,795. Accounts payable did not change, so it will be $15,900. But we have a new account, refunds payable, from the adjusting entries, and it will be $4,500. We also have salaries payable, a new account of $2,400, and interest payable, a new account of $1,800. Our unearned revenue did not change, so it will stay the same at $13,500. The note payable did not change, so it will be $43,000. Common stock did not change, so it will remain $30,000. Retained earnings is the same at $13,050. Our dividends didn't change, so they'll be $23,000. but sales revenue was adjusted for the estimated return, so it would decrease by $4,500 and be $301,250. Sales discounts forfeited did not change, so it will remain $250. The interest revenue is a new account that we didn't have previously, and so it will be recorded at the amount of $500 for the adjusting entry that we made. Cost of goods sold was adjusted for the estimated returns inventory of $1,800, so it will now be $139,450. Salaries expense selling was adjusted, so it will now be $30,400. Rent expense did not change, so it will stay the same at $15,200. Salaries expense administrative did not change, so it will remain $5,600. The utilities expense is the same at $10,000. We have two new accounts. We have depreciation expense equipment administrative for $1,295 and interest expense, a new account of $1,800. And we can see now that our adjusted trial balance is in balance with $463,945 in both debits and credits. The third portion of the problem asks us to do Tiger Electronics multi-step income statement for the year ended March 31st, 2024. So first we have our heading, Tiger Electronics Company income statement, year ended March 31st, 2024, and we're going to use the information from the adjusted trial balance to complete the multi-step income statement. So we're going to start with net sales revenue, and we will take the amount that we see on the adjusted trial balance of $301,250, and we will take the amount of cost of goods sold, which was $139,450 on the adjusted trial balance, and that gives us gross profit of $161,800. Next, we're going to record our operating expenses, and we're going to classify those according to whether they are selling expenses or administrative expenses. So when we go to the adjusted trial balance, we will look for first our selling expenses. So we had salaries expenses that we're selling of $30,400. We had rent expense for selling of $15,200, which gives us total selling expense of $45,600. And now we need to record or subtract our administrative expenses. So we had salaries expense administrative of $5,600. We had utilities expense administrative of $10,000, and we had depreciation expense administrative of $1,295, and that gives us a total administrative expense of $16,895, and total operating expenses for both the selling and the administrative of $62,495, which, when we subtract from gross profit, gives us operating income of $99,305. But we also need to subtract or add our other income and expenses. So we go back to the adjusted trial balance, and we see that we have sales discounts forfeited of $250. We have interest revenue of $500, and we have interest expense of $1,800. So that gives us a total other expense of $1,050, which that will be subtracted from operating income to give us net income of $98,255. And that is the conclusion of the demonstration for problem 538A.